Hello everyone, and we'll be talking about the metals and mining sector today. And I'm here to discuss the recent fundamentals which are impacting the metals and mining sector. So let's talk about the overall scenario. We'll start with the ferrous side, which is steel. Steel sector as a whole globally and in India also is going through a very interesting phase. Globally, if you look at the production and the demand, supply and demand rather, is actually moving in almost tandem. So in India, the overall demand and supply, if you look at for the last 11 month till February, the demand has grown by 7.6%, whereas the production has grown by 2.8%. This demand growth is very impressive, and during last 3 years is the best one, and is driven by overall improvement in the economic scenario. So this is actually driving and supporting the prices. Globally also, the trade protectionism measures taken by various countries have been helpful for the prices. Uh, Recent movement, if you look at the raw material for steel, which is iron ore and coking coal, for last 1 month, we have seen a significant decline in that. Iron ore fell by 19%, coking coal fell by about 17%. But despite that, the steel prices have been hovering at around 590 to $600, which is more or less stable. So we can see further improvement in the spread in the coming months for this quarter as a whole, and of course in the first quarter of fiscal year 2019. In the domestic market also, the prices are much more stable, both long products and the flat products. In case of long products, we can see this kind of strength which has already been there since last fortnight of December to continue at least for the first quarter of FY19, and after that there would be seasonal movement in the prices. So broadly, we have a positive view on the steel sector as a whole. For the raw materials, as we discussed, we are not very positive on the iron ore side because huge production is coming in, and if further production cut in steel happens in China, this will be negative for iron ore prices going forward. Even in India also, we can see further ramping up of mining activities. The government is much more proactive now to allocating many mines through auctions. So overall availability of iron ore in India is likely to remain at a higher level. Even for coking coal, that particular commodity might see some kind of volatility, and it will be crucial for the steel prices going forward. For 1.5 years from now, we have a positive view on the steel segment as a whole. We'll just touch a brief on the stainless steel segment also. Nickel is a very crucial raw material for stainless steel, and we have seen about $1,000 up move in nickel prices in during last 1 quarter. So going forward, we can see in Q4 the stainless steel companies to report better realizations, and being a best quarter for Q4, we expect the results to be even better compared to Q3 for the stainless steel companies. We have a positive view on both the stainless steel companies which are listed now. For the steel also, the consumable sector like graphite electrode prices have also been very high as of now, and we expect this trend to continue even going forward. This is because of the structural changes which is happening in China. A country is actually shifting from blast furnace to electric arc furnace, which requires graphite electrode, and the supply is actually not able to keep pace with the demand. So we expect graphite electrode prices to continue maintaining their strength, and both these companies listed place Graphite India and HEG, though we don't cover those two stocks, but we are very positive on those names. And whatever we have seen in Q4 numbers are likely to be better, but FY19 is going to be very stellar, and I think both the stocks to do really well going forward. Shifting our focus from ferrous to non-ferrous now, we have seen some kind of price corrections in most of the base metal prices. Aluminium has been the most volatile commodity in this regard. Prices fell by about almost 7% during last 1 month, and this is because of the US tariff decision which imposed on most of the countries. Other metals like copper, zinc, lead also fell by about 2% each in during last 1 month. I think unlike steel, where we had seen significant amount of cuts in China, aluminum capacities were cut in China, but not to that significant and not to meeting the expectations. And also there are new capacities which are coming up, which will be crucial for aluminum prices going forward. $2,000 per ton be a level probably where aluminum can hover around. But zinc prices are looking strong. However, the commodity is in backwardation, so going forward there could be improvement in supply, which would be aided by a couple of mines which are coming up within next 1 year. So we are not very positive on the base metals as commodity as a whole, but there would be kind of steady movement. And in the stocks point of view, we are positive on Vedanta and Hindalco because of their company specific reasons. There are more number of triggers in Vedanta compared to Hindalco as of now. Aluminium, which segment which was not doing well, they are actually recovering. Zinc, Hindustan Zinc is doing well. The oil and gas segment is also likely to do well. So there are a number of triggers which are there for Vedanta. In Hindalco, Novelis is going to be the major driver because in domestic market the company is already operating at about 100% utilization level. So these two would be our preferred pick in the non-ferrous segment. And again, just to touch upon for the ferrous sector, we are positive on Jindal Stainless Limited and Jindal Stainless Hisar Limited. We are also positive on Tata Steel, and in the mid cap space we are positive on MOIL. Manganese ore prices have been again going up. MOIL has already taken a price hike, and I think the company's volume would be also better going forward. So we are positive on these names.